This lecture is organized by Qatar University, and Doha Chapter is delighted to have you all here today. As most of you know, Doha Chapter is one of the global chapters serving IMA members around the globe. IMA has been in business since 1919 in the US, and is celebrating its 100th anniversary this year. And Doha Chapter is one of 300 chapters serving the members around the globe. There are more than 125,000 members under IMA, and in Qatar we have more than 550 members. More than 70,000 CMA certificates. This is the flagship certificate that is sponsored by IMA, and Doha Chapter is awarding almost 30 to 40 CMAs every year. Without further ado, let me introduce our speaker tonight, Professor Karma Sharif. She is a professor of Management Information Systems at the College of Business and Economics in Qatar University. Before joining Qatar University, she taught at Temple University, Texas Tech, and Texas Southern in the US. Her research focuses on the adoption of disruptive technologies like the IoT, or the Internet of Things, artificial intelligence, and blockchain. Professor Karma has published articles in top-tier MIS journals, such as MIS Quarterly, Decision Support System, Journal of the Association of Information Systems, and Information and Management. She has exclusively focused on qualitative research methods for theory building. She is also the author of the article, Why Do Information Systems Controls Fail to Prevent Unethical Behavior? Published in Vine, Journal of Information and Knowledge Management Systems. Please, ladies and gentlemen, put your hands together to welcome Professor Karma.
Assalamu alaikum wa rahmatullahi wa barakatuh.
Well, thank you all for attending. As Asham have introduced me, I'm technologist by training, so I don't have much of an accounting background. I've done a couple of research in accounting, but the way that I've structured the session today is to make it more interactive. So I'll depend more on your knowledge of accounting to spur the discussion of how information technology is changing or is reshaping the ethical code for accountants, and how accounting and the ethics, accounting ethics, can help avoid many of the threats that these technologies present. So, as I was looking at your code of ethics, I found that you have numerous. I mean, this is a discipline that is very rich in ethical codes. I mean, like every couple of years, there is actually a modification or an update of your ethical code. You have so many different associations that come up with new ethical codes. So you have the Association of Certified Public Accountant, Chartered Institute of Public Accountant, Institute of Internal Auditors, code of that have some of them have came up with code of ethics. So you have code of ethics for professional accountant, code of professional conduct in accounting. So I don't think, I mean, like the question may be, why do we need a talk on ethics? Why do you think we have a talk on ethics? Why is it required by your association to have at least 2 hours every year training on ethics? If we have all of these codes, what's the problem then? You have to be interactive, as I said. Yes, sir.
Means that there is no reliability of financial reporting.
Okay. So,
This is the most important factor. There is no basis existing.
okay. So what are the codes dealing with? Basically, I think you have 5 different principles that you as accountant have to abide by, which are being objective, protecting the privacy of the client data, having integrity, being independent, especially when conducting audit, working with the framework that you have, so you have to follow the rules and regulations. And despite of that, we still, like every year when you look at the report coming from the US on the number of fraud cases that have been reported, we still see an increase. And we have 40% dealing with misleading reporting, fraud, tax evasion, lack of transparency, breach of confidentiality, and all of these problems that you see on the chart. And then the question comes, who's responsible for this? Why? Why do we continue to see these kind of problems occurring in small and large organizations everywhere, all over the world? So you don't see actually a region that is kind of plagued with these kind of problems, but it is all over the place. Who's responsible for it?
I think everyone is responsible because the whole world is evolving. It's a very challenging environment. It's often, I think, in the mindset of the people, those challenges that are putting in might push them to unethical behavior. So there's always a call to go back to the golden rules of being ethical in the environment.
That is true. That is right. Everyone is responsible to portray an ethical behavior. However, research and my research have found that usually it is a problem with the top, people at the top. They do not portray the right tone to the whole organization, and then you see unethical behavior propagating throughout the organization. So in terms of small and large organizations, we see all kinds of organizations being tangled with these kind of problems. So even though they try to portray themselves as ethical organizations that abide by ethical standards, however, we see Google, Starbucks, Amazon are accused of tax evasion. Coming to accounting, PwC accused of sharing confidential information of clients. Microsoft accused of bribery. And then others, and so on and so on. So it's not just small firms that are not disciplined and following an ethic code of conduct, but it is actually also large organizations. And as I said, it starts at the top. So what we have ended up in accounting is, unfortunately, a loss of public trust. They conducted a survey, I think originally in 2000, before 2000, 1990s, end of 1990s, and then repeated the survey again after the 2000 kind of problems that we had with financial reporting and all the scams that we had. And they saw, when they asked them about their trust in accounting, whether they think they are independent, whether they are low compliant, whether they are incorruptible, and can be easily influenced. There is a huge difference between the 1990s and the 2002, after 2002, and all of the problems that we saw. And as I said, a lot of the problems had to do with top management. So you see, for example, Toshiba being accused of accounting scandal of 102 billion. What happened with Enron and all of the other large firms, the problem mainly reside with people at the top. And we will see throughout the presentation that even though we have a lot of complex technologies that are existing today that kind of promise to reduce the risk and of fraud and make the organizations more ethical. However, that may not be possible as long as we have corrupted top management. Do we have anyone from top management here? Don't want to be piggy.
It's not only the top, because those people are exposed, right?
Uh-huh.
Are under the light. This is why you can take them as an example. But it can happen in all layers.
Well, I have to say that I do not have any knowledge of what's happening here in Doha. So I'm saying, like, just like as a...
We were taking an example of only the tops, whereas unethical can start at any layer. This is my personal opinion.
I understand, but the impact that we see...
Top will take the example. They are examples. It's like role models to other people who are, at the beginning, they were not on the top, right?
Mhm.
But the unethical, it could be at any level.
If the top management is quite strict, those things won't happen. You know, when you make it strict to the top and then it goes from down. So, you know, you don't give them a chance to do unethical things. So if the top
They are role models, but I'm telling that you shouldn't judge it. It could happen at all layers. They are not for others.
You are right, and I said yes, we are all responsible. However, the impact that we see on organizations and on stockholder equity and all of this, it's much grave when the fraud is happening at the top. And I think that's what I have found in terms of research. But when I said I don't have any knowledge of what's going in organizations here, is that I have not conducted any studies here in Doha, so I have no sense of whether there are like problems occurring at the top more or less in terms of so why the top? Why the top? Why the top? Why do we see a lot of fraud happening at the top rather than at lower levels of the organization?
Probably a lot of decision making happens at the top. A lot of strategic decisions or proactive decisions happen at the top. So
Uh-huh.
there's a lot of influence and impact for the decision has been taken at the top.
Okay. So are you?
All of the angles, they have the volatility, they have the rationalization, and they have the pressure. All three, they can make the decision. For example, I'm in the lower layer, and I want to make a decision which is unethical. I don't have the opportunity.
Excellent. Yeah.
I have the rationalization and the pressure, but I'm missing the angle of the opportunity.
Uh-huh.
So they have all three angles. They are exposed to it.
Okay. So no one is more powerful other than the CEO and the CFO. I mean, like these have a lot of power. And also in terms of pressure, looking at their reward, if there is like fraudulent activity, the reward that they can get in terms of falsifying financial statements is much bigger than if someone at lower level commit fraud. And again, I mean, you have a lot of authority, you have a lot of control, so again, opportunity is there. And they have found they also can have their own rationalization. They don't depend on others to rationalize that behavior. As I said, I mean, like I haven't conducted any research outside of the US, but I was looking at whether is it global problem or is there like specific regions that are plagued with this? And I found that There is a lot that is reported. 55% is reported in the US, and that's why it is easy to find data from that region. But was kind of surprised to see that only 2% are being reported in the Middle East, given all the propaganda that we hear about, like unethical behavior happening in there. So any explanation? Why do you think we have very low percentages in areas that we know there is a lot of unethical behavior happening?
Because
We are too good?
my opinion is that the cases that happen in the Middle East, mostly they are not reported.
They are not reported.
Because they fear a loss of the image of the organization.
Reputation.
And that's why they tend to come to a reconciliation with the sponsor and not expose any news to the outside, so they will keep it going.
And that's, in my opinion, is the main reason they continue to have the same problems over and over again. Not sharing that information, that means you don't have that collective and concerted effort to resolve the issues. And as a result, I mean, you continue to see the problem over and over. One student have mentioned to me, and I don't have any way of validating that information, is that here, if someone is caught of like doing fraud, they're just like expelled. So there is no legal actions taken against them. Is that true? No? There is? Yes.
Even though there is legal action, but the information availability within the public access level also not there.
Ah.
This is another constraint, the percentage is going down.
Oh, okay.
Are these companies that you're looking at, are they mostly public companies?
They are public companies, yeah.
So the reporting requirements in North America and the US are substantially higher. And shareholders are a lot more active.
So about the law over here, is there obligation on public firms to provide that information?
Yeah, well, they have to report, right? All their financial information. If you're publicly traded.
No, I mean like reporting fraud and making it available to the public. Is that
Oh,
here?
here I don't know. I know in North America.
Could it be because they are more regulated here in terms of Sharia law, which is not applicable in other regions of the world?
I'm depending on your opinion because I do not have.
The perspective that you should see,
Uh-huh.
Sharia law over here, which is not prevalent in the other regions.
All my information are coming from secondary sources, so a lot of the graduate students who come to my class are actually working in financial institutions, and they claim that there is a very high rate of fraud happening within, for example, banks and so on. However, it is not reported and it is not publicly available. Whether this is true or not, I have no way of validating it. But you may be true. It could be that the laws are strict here. That's why we see less reporting of fraudulent activities. So I know that majority or all of you are working. So do you think technology can help? How? In your own like job, what have you seen where technology is able to stop fraud within an organization?
Not going to stop, going to eliminate, reduce it, but not stop. You cannot stop it.
Uh-huh.
You're going to reduce it because if you have technology, you have some kind of authorities controlled by somebody else, which is system of different things. So at that time, to enable you just to apply the rules and procedure that you have to apply in your company. That's why it will help you, support you for that. But not going to minimize, but not eliminate at all.
So I think 15 years ago, I started teaching ERP systems, SAP and the internal controls within SAP, and I started doing research in that area, and my thoughts were, there is no way anyone can commit fraud if the system is configured the way that I am looking at it. How can they? I mean, like, there is a lot of controls and layers. It's not just one control, but you have layers of control. So how can someone commit fraud within such a system? And I started with an organization where the CFO was actually went or gone to prison. The CEO was dismissed. And I tried to look at the ERP system in there. And I found even though there was a consulting firm that was configuring the system, however, as I said, I mean, like, the problem was people at the top. What tone? So they had like top management always going to lower level employees, trying to circumvent the system, trying to override some of the controls, and so on. And from there, I realized that that positivist view towards technology is not really a true reflection of what's happening in reality. That it's not that technology can be a silver bullet where it will actually stop all kind of fraud. The fraudulence or people who commit fraud will always, if they have the opportunity and they have the pressure and they have the rationalization, then they will be able to get through. So those of you who said that they think technology can help, what do you think the technology that I'm going to talk about today? Any idea what new technologies are being implemented in accounting? Yes?
Before going to that, if we took Enron as an example, they had the best internal controls in the world. They had the best external auditors at that time, which was Arthur Anderson. And they had the best systems, probably. But yet, they failed. Because maybe, as you mentioned, maybe the culture or the top management.
But all, I mean, like,
the most important asset is its people.
Mm-hmm.
So if you have the good people in place, whether you have the best systems or not, things will go on easily and smoothly. But if you have corrupt people, then even if you have the most intelligent systems, it won't stop them from doing wrong things.
I think one big problem was that the Arthur Anderson at the time was actually a developer of the system and the auditor, so they can play with all kinds of system, and that was a big problem.
The answer of the question, whether I have the best system in the place, is it going to prevent fraud or not? It is doubtful.
That's right. Okay, so what kind of systems do you see today that you think are helping accountants be more ethical?
Blockchain.
Say that again?
Blockchain.
Blockchain? So,
AI, artificial intelligence.
artificial intelligence. Anything else? Okay, so you got two of my technologies that I have on list. Of course, blockchain and artificial intelligence will definitely change how we are doing accounting and how they will help, or the idea is that, or the promise is that they will help accounting become more ethical because of the values that they embed within the technology. So I'm going to add to it one more, that's the Internet of Things. So why do you think I've added Internet of Things? A new technology, most companies are rushing into adopting them. Why the question about whether it is more, or the moral question of whether should we apply these technologies or not? If they have come up with the statement that these technologies will improve efficiency, will reduce cost, will increase competitive edge, so why the doubt there? So one thing I think all of you may want to consider is that what has been written in the literature, that these technologies will have drastic effect on accounting in terms of the jobs that are currently available. So in one article I've read, 30% will be done by technology. In another, actually more drastic, 60%. So I think that's an alarming number, and to think that a lot of what you are currently doing will be done by technology, of course, that's a moral issue. Because if you don't have your job, what will you be doing at that time? What are companies actually preparing you for that next wave of technologies? Are you alarmed? No? So what do you work? Because I am alarmed. Now they have artificial intelligence that actually writes programs. So I'm saying, what is it that we will be doing, technologists? So I mean, like, there will always be a role for humans, yes. And it will be, even when they say, okay, decision making will have to be left to humans. We are seeing nowadays that it is a partnership, or part human, part machine. So
the machine will take part of the routine tasks, things that can be automated. As we have seen in the past 20 or 30 years, many jobs has been abandoned right now because it has been replaced by other things, or because there's no need for it. Similarly, in the future, the machine will take part of some of the tasks that currently humans are still processing.
Wave that will be faced with the automation and the digitization and the effect of it on their jobs at that time. So IoT, I'm sure like all of you are familiar with it, is a technology that is capable of devices that are connected to the internet and are capable of receiving and transmitting information. They can transmit information to other machines, so there is collaboration and organization among different devices, information sharing, actually make a decision. So whether they make a decision at the device level or not, either they transmit the data to the cloud and the cloud does the decision, the data analysis at the cloud level, or at the device level they are able to, as soon as they sense, they can analyze the data and make a decision. So the parts are like, of course you have to have sensors so that they can sense the environment or the state of the device itself. They have video cameras, and again, to monitor the environment. The actuators are the part of the device that can make an action, that can take an action based on the analysis of the data. The transmitter and the receiver for receiving data or transmitting data to the cloud. And whether they have the computer chip or not will differentiate whether the device can take a decision at that level or not. So with like some, or one example would be the RFID, where you are able to track where an asset is, be able to find out its status in real time, be able to monitor its condition, all of that information in real time, which is very important for accountants and auditors. Why? You have to help me. You have to answer questions. Otherwise, I'm going to pick on you personally.
Real-time probably helps in early detection of any possible frauds or mistakes being done, intentional, not intentional.
I didn't catch the first part of your sentence.
Well, you said real-time information. There could be some mistakes done, intentional, unintentional, which could possibly be element of fraud. So real-time information helps in early detection of it.
Okay. That's right. What will be the impact on record keeping?
Update all the time.
Oh yeah, so you update all the time and you have automatic record keeping. So input of data is done by the device, by the asset itself. No human intervention in there. So you're able to track your assets. So with the IoT, if you have movable assets, you're able to track where they are. You're able to track the rate of utilization. You can find out what your stock is at any point in time. You can audit that stock without having to move. You have, as I said, like better idea about the asset utilization. And then because of your ability to track the asset, then you can also share the asset. If they are not utilized in a specific place, then you can move them to another place where they are needed. Do you agree? So with the IoT, you as accountant will be able to understand, you'll have an audit trail. You are able to understand why a particular value is being reported on a financial record. You have continuous, as we said, real-time monitoring. You have data accuracy. We don't have human intervention, so it is objective. You can always look at the data, the storage of data that is collected by the device. So now you have a comprehensive view of what's going on instead of having to jiggle with all of the data coming from a client and the reports and figure out how they came up with that particular number. And now, anyone heard about digital twin? So now, with the IoT being able to collect data from the real world, they are taking that data and feeding it into a simulation program in order to better predict the future and better, like for example, determine what would be the exact depreciation value of a particular asset and so on. So this is based on actual data rather than secondary data. Yeah, it is real time, so it's always updated every day. So that's all good. We're saying, okay, and most accountants, if I ask them, would you prefer doing bookkeeping? They will not like that. It's very tedious, so if we tell them we'll take that job away from you, I mean, no one will object to that. What's the concerns then? Believe it or not, there is ethical concerns. Can you think with me what would be the ethical concern? Okay. Now we talked about devices or assets having sensors that are capable of transmitting information in real time about their state, about the environment, about the rate of utilization and everything. So you as an accountant have better visibility and better understanding of the evaluation of the asset and so on. That's all good. Is there any ethical concerns with that technology? It could. Well, my question was actually about the negative, but let's start. Maybe I jumped ahead of myself. Say that again.
Any theft or missing the asset we can find.
Okay, so we have visibility.
Before we are using like papers receive vouchers, so now people does more manipulation, they get able to be more manipulation, but now since it's devices, so transmit information, it can be more accurate, less manipulation, so devices more than papers working.
Excellent. So we have data integrity. Anything from that side? People at the back?
I think the problem might be the availability of information and the access of.
Are you talking about at the negative now?
Now, yes, about the negative. So you have lots of information, which might be personal information. It might be some sensitive information,
There you go.
and it might be used in a way which is unethical by other people who are having access to those information. So this is one of the negative things.
Yeah. That's a huge problem, privacy and security. Now, if you have something that you can monitor remotely and you can control remotely, then at the same time it can also be hacked remotely. So that's the main concern that we have here. Two things that are problematic with IoT. In every single article that you, or any person that you talk to about IoT will tell you, now you're collecting data that may pertain to a client. It's going to the cloud. It can be hacked. The asset can be hacked, the asset itself. So how the actuator work, that part of the asset that can make a decision can be affected. And something very funny that I have read today was someone asking a question, why would someone be interested in hacking my toaster, the bread toaster? Why?
He can have access to the bread toaster, he can access.
Excellent, yes. So because your bread toaster is connected to a network, to a personal network. So it's not just like affecting also the asset, but also being able to access the organizational network through that asset that is problematic. So privacy, as I said, and security. Now, what will you do with the data that's being collected by that asset? If it is need to be private, need to be protected, and what will happen if we can impact the decision making of these assets and also have access to the whole network behind it. Okay, any questions? Oh, okay. So we'll go to artificial intelligence. Anyone using currently artificial intelligence at work? No? Okay. I know within SAP they have predictive analytics now that we actually teach at Qatar University, where they are able to, for example, to detect fraud, to go over all transactions and find anomalies or find like irregular pattern within a particular set of data. However, again, a lot of talk is now being, or discussions done, how artificial intelligence is going to affect the accounting field. Because a lot of the tasks, even that require, for example, looking and auditing transactions, can be done by artificial intelligence, and specifically machine learning. In machine learning, we have two models. One called supervised learning, and the other is unsupervised learning. Usually, we start teaching, when we teach machine learning, we start talking about unsupervised machine learning. And that we just like give the software data. All we give it is just data. And we tell it, look at this data and find patterns. So for example, we can look at clustering certain transactions. What can be categorized as fraudulent and what cannot, without even labeling anything. So the software goes through thousands of records. The data that we are working with, the least would be 400,000 records. And this is done in a matter of just like less than a couple of minutes. Machine goes very quickly through the records, find out patterns, and create clusters and say, okay, this group of transactions or these group of records are similar, whereas these are dissimilar. That all the ones that are clustered together, they have very little variations. They are very similar, whereas those who are in different clusters are very different from each other. And that's what we call unsupervised. So it's just the machine trying to identify certain patterns. And then there is the supervised, where you tell the machine, you provide labels to the machine. So when you give it a record, you're telling it what is the dependent and what is the independent variable. So if I'm looking at fraud, for example, I give it the size of a transaction, other variables that are important, and telling it, try and find what is important, what determines fraud, what are the variables, what are the features that are important that determine fraud. So you kind of prioritize the features. You're trying to identify what are important characteristics that you should look at when you get a new transaction to identify whether it is fraudulent or not. The machine, of course, gets trained. So you train the machine. You give it 80% of the data and you say, take this data in order to find out relationship between the independent and the dependent variable. And then you test the machine. Then you tell it, okay, we have 20% of the data that you haven't seen. Go ahead and predict, but you already know the answer. So you're trying to test the machine. And if there is something wrong with the prediction, then you make justification. You provide feedback to reinforce the learning, to improve the performance of the machine. So that's basically what artificial intelligence or what machine learning is. So
what's the deep learning?
Say that again?
Deep learning.
Deep learning, yes. So the deep learning is trying to identify a relationship between these different variables and trying to prioritize these variables in terms of their importance in predicting that.
Is it similar to machine learning? Or
It is part of machine learning, yes. So all of these technologies, of course, the speed of the machine and the power, or the computing power, is also getting cheaper and getting more powerful in terms of its ability to run through huge number of records in a very short period of time. And as we said, identify these patterns and find out the irregularities, which makes it very easy for an auditor, for example, to go through zillions of records in a very short period of time and identify which ones are irregular. So of course, again, huge promises in terms of time and accuracy and ability to analyze the data, detect patterns, real-time auditing, again, because of the speed of the machine and its ability to crunch huge number of records, along with the algorithm itself. The algorithm, its ability to learn from the data and identify these patterns. So, like before, usually with every new technology, we'll see increase in efficiency, improve in quality, free up time for professionals. So you don't have to worry about looking very closely at all of these records. The software will pinpoint, will identify, will flag the transactions for you. Okay, so everything is good. And I'm going to show you a YouTube that might be more interesting than my, I hope that the YouTube video. It is from KPMG, and they have an artificial intelligence agent Clara. Anyone heard about it? So the software is capable to identify, flag a particular transaction overnight of being fraudulent, sent an alert to the manager, and then the next day a manager is telling the auditor to look at that specific transaction. Auditor is communicating with Clara, which is the artificial intelligence agent, and telling her to zoom at specific sources of data, to generate specific charts. Of course, the intelligent agent is capable to understand, because of the natural language processing, any language. I mean, I can understand the English, any command that you talk to her and tell her. So speaking in just like layman English, telling it to open specific sources of data, pull out these data, generate the charts, and all that is doing in a matter of like seconds. So it's as if you have a personal assistant, very quick, is capable of following your instructions and instantaneously doing them. So basically what it's saying is that it will help auditors in terms of like flagging these specific transactions, but of course you will need like the human intervention in directing the software to look at specific sources of data. Now he's showing like the manager what data Clara was able to find and how can they rectify the problem. Okay, so do you see any concerns with artificial intelligence? Like I asked you about IoT, well, everything is fine. I mean, like, usually when a new technology is being introduced, what you hear is all the hype, good things about the technology. But then it takes like a year or so for all the concerns to start popping up. So have you heard any concern other than artificial intelligence is going to take away jobs from accounting? Any other concerns? No?
When it comes to unsupervised learning, the model can understudy or overstudy the data, and then the forecast that it will give is misleading. It might not develop true relationships. And when it comes to supervised, the researcher can do data mining. He will want the model to learn what he wants the model
Excellent, yeah.
So, both ways there are.
So the main problems, or nowadays there is a lot of talk about the bias within artificial intelligence, that these software are actually written by humans, and the way they detect like fraudulent activities or make a specific prediction is based on the logic of the software developer, the person who wrote the code. If not, if there is no like biases even in the reasoning of the software developer, then you also have a problem with the data. If I have like a set of transactions with 99% about a specific output and only 1% about the other output, then there is no way that I can be accurate about the 1%. So, for example, in the US, they looked at the software trying to predict behavior of employees. And they always find problems with African American. And the first thing that they said, okay, that whoever wrote the program is actually someone who is not like, who's prejudiced against them. However, they found it's just the data. The data that is being fed into the program is skewed. You have majority of the records on white people, very few on African Americans, so there is no accuracy simply because what you have fed into the machine. So bias in the data will result in bias output, and also if the person who's writing the code is biased, that will end up also in like output being biased, of course. Now, Google and all of the large organizations are actually studying this and trying to see how can we reduce the impact of bias within artificial intelligence, because that have very serious implications towards humans. Now think of fairness, as we said. Think of transparency. Think of actions that can be taken by the software itself. So they looked at a game where you have like two artificial intelligent agents playing against each other. And the game was that the agents should be collecting as many fruits as they can. So if there were abundance of fruits, nothing wrong happens. If there were scarcity of the fruits, they found that the agent starts being aggressive, and they start taking like actions like using a laser in order to kill, or and that was, I mean, like the laser was there, but the action was not actually specifically mandated by the software. So I mean, like this, it is a game, but it is very serious implication. Think about like now accountants, people who are financial reporters, someone who deals with financial data. If we have now an artificial intelligent agent doing this, and we are feeding it with the purpose of maximizing profit, and you have implicit greed in there and aggressiveness, what will the implication be in terms of financial reporting? So these are like very serious problems that people also from accounting are looking at them. So they also did an experiment, and they tried to see who is They had participants where they have artificial intelligence software to help them make a decision, and then they do the decision away from the software is not taking the decision; it's just advising the accountants. And if the participants are unethical and the software is opaque, a big problem with artificial intelligence is that when the machine make a prediction or make a recommendation, you don't know why. Why did it do that? That's a black box. The normal user does not have the logic of the program itself. So all you do is you upload the data and you tell it, okay, look at the data and identify patterns, and they would identify the pattern. And then you tell it, give me a recommendation for this particular instance. And the machine will give a recommendation. But you don't have an explanation as to why it happened. So now the experiment was trying to look, if someone is unethical and they have a software agent or artificial intelligent agent helping it make a decision, will they make an ethical decision? And they found out that actually they don't. Why? Because they don't have understanding of how the system is doing. So if they are unethical, the system will not help them make an ethical decision, even if it recommends one. But because of the fact that they don't see how the system is working, then they may go with their own perception and their own rationalization and take an unethical decision. However, if the model is open, if they understand how the model is going and how it reached the recommendation, and there is clear accountability, then they will make an ethical decision. So at the end, so what do you think are the implications? Now, if I am an audit company or an accounting company, and I want to use artificial intelligence, and I want to make sure that my accountants will act ethically, what should I do?
I think the skill set of the accountant has to match
The skill set, so you have to follow the framework, so there has to be strict abidance by the code, by the framework that you use or the methodology that you are using in order to prepare your financial statements and so on. But more importantly is the logic. You have to actually, they have to understand the logic. You cannot just like make them treat the AI as a black box, and that's a big problem in artificial intelligence. If you do not understand how the machine is working, then it's very easy that you circumvent that decision and go with another recommendation. So accountants need to know why the machine have flagged specific knowledge, specific transaction. You cannot just like take it blindly. In another research, they have found that people who actually use a lot of software, especially accountants in their area, and they don't have the technical background, they have not accumulated the experience, then they will not accumulate it. It's much better that they get trained without the software at the beginning so that they understand the logic and they understand the concept, and then they go to the software instead of going to the software right away. And we see that all the time with our students. I mean, like, we have a lot of simulations and a lot of databases where they can give a specific problem and to the software, and the software come up with the solution. All they are interested in is getting the right. No?
Yes.
I just, maybe I'm very cynical, but I feel that if humans are the ones programming the AI, it will depend on the person doing the programming. Like, that's the flaw in all of this. If humans are still making the decisions, there's still that room for unethical behavior to come up. So until that can somehow be done away with, which is not possible, it will always be a concern.
So your answer is, for the question, can AI create an ethical account, right?
Yeah.
My question is, can we do do you think you can help us be more ethical? Given all of your standards, all of your methodologies that you have developed over the years, and so on, is there anything in audit that can help us in terms of making ethical artificial intelligence agents?
If the AI is able to make. So you've already said that there's research that shows that AI can become greedy and aggressive.
That's right.
So is there a way to minimize that?
Okay.
The same way people can become greedy and.
So humans by nature are greedy, and some of them are aggressive, and it is of course a major problem within organizations, especially at the top. What is it in accounting ethical code that would prevent this from happening, or at least propagating throughout organizations?
From the AI?
From the accounting perspective.
If I had an answer to that.
Yeah.
I think as we said, the AI is as good as the logic behind it, or the code, or the formula. So our role is to make sure that code or formula is direct to the point and not biased as possible. So the more ethical that formula and the logic behind the AI, then the result will be that the artificial intelligence will be ethical, giving ethical results.
I guess I'm not stating my question clearly. My answer is there anything in your field as accounting, in the accounting field, that can help technologists become more ethical in terms of building ethical software?
I think the knowledge of the accountants, the knowledge they share can help in creating right ethical AI. There would have been the experience of the accountant itself, where he has tried and tested many fraud occurrences in the past, and actually building up these so-called sequences of pattern recognition, which can help in building up the logic for the
Okay, so of course, I mean, like in your ethical code, there is a lot of literature about ensuring that whatever that the records are secure, that you have a governance structure in order to audit the records and understand how a particular transaction is being flawed. And so on. So the same kind of model can actually apply to the software itself. So you have to make sure, as we said, that the AI model is reliable, that it can accurately detect, and if it detects a specific transaction, we are able to answer the question why this particular transaction. And we also have to make sure that it is secure. With the fact that everything is now being connected to the cloud, whether it is IoT or AI in real-time monitoring and blockchain, as we will see, we have to make sure that it is cyber secure. But more importantly, humans have to be involved in order to be able to audit these code and understand how they are working, how are they coming up with to identify a relationship and to prioritize these relationships. So you cannot just like focus on, with the supervised, there is no way that whatever you are telling it, that will have an impact on the recommendation of the machine. And again, as we said, privacy is a huge issue, and that's why EY came up with a trusted AI framework. So they want to make sure, as we said, that the AI outcomes are aligned with the stakeholder expectation. That you cannot have, or you have to make sure that the artificial intelligence act in the best interest of the client or the stakeholder. That the end user knows that they are dealing with AI. That's a big problem within consulting firms, accounting consulting firms. Why? Someone was telling me the other day is that it is actually the consulting firms that will stop using artificial intelligence agents, artificial intelligence software. Why do you think that will be the case? They will, or at least limit the use of it. And that's because of the revenue formula. If you tell a client that you are using software, you cannot charge the same amount as you would if you have an auditor or a human expert working on the engagement. that it is less costly and less profitable for the accounting firm if they tell the client that they are using artificial intelligence. So if the expert is actually working, they can charge more than if the software is driving it. And as we said, I mean, it's very important what they're saying. If you are going to use AI, it better be the accountant or the people engaged in an engagement should be able to explain why the software came up with a specific recommendation. Otherwise, it will not be ethical. Of course, resilience in terms of security and the bias, that you have to make sure that the software is not biased and the data is not biased. Are you still not concerned? Okay, so the last one, my last technology that I'm going to talk about is the blockchain. And I've heard someone saying blockchain. So any organization currently experimenting with blockchain? Anyone? So what is blockchain?
Fintech company are using this.
The fintech. Okay. So another term for blockchain is distributed ledger technology. So you know, every company have its own ledger, right? There is no distributed ledger. So the idea with the blockchain is that whether it's the public or specific actors are connected as peers, and each one has an identical copy of the ledger. So if 4 of us, let's say for simplicity, are trading with each other, then every single transaction that happened between us will be recorded on the blockchain, and before it is recorded, it has to be validated. So all 4 of us need to validate it, and once it is validated, it will be posted on the blockchain. And if it is posted, then it cannot be reversed and it cannot be changed. So that's the whole idea behind the blockchain, is that it is a distributed ledger where the network, all nodes on the network have the exact same copy of the ledger. And every transaction that is being conducted on that network has to be validated before it is posted on the blockchain. And why do we call it blocks? Because transactions are posted in blocks. And every block is connected to the block before it by cryptography. And again, the content of the block itself generates a particular key. If you change any data, the key will be changed. And also, everything before it will be now not valid. So it will not be, there is no way that if anything is falsified or changed, that it will be valid. Everyone will be notified that the ledger is now not consistent, that the copy of the ledger is not consistent. And it is very important that all copies be consistent. And that's why they think that blockchain would be like the silver bullet for accounting, because you have transparency. Every single transaction, as we said, is posted on the block. It is immutable, which means once it is posted, that you cannot reverse it, you cannot make changes of it, because that will invalidate everything on the blockchain, and like everyone will be alerted that there is something wrong with the blockchain. A record for a particular patient can have access to it along with the patient. So they have what we call a private key. The private key enables them to access that information. So it's not open for everyone. So the sharing of data in real time is a big benefit.
It can be in that case supplier and the organization.
Of course, yeah. Like within the supply chain, we are actually Qatar University have won a grant from the QNRF for $2.5 million in order to experiment with the blockchain for trade finance. So what we have suggested is that on the blockchain we will have importers, exporters, the customs, the banks, so the certifying agents who certify like the origin of particular material. So there is no real benefit for just one company creating a blockchain for itself, because that will be exactly the same like an intranet. But the real benefit and the economies of scale come when you actually open the network to other business partners and other players within the business process. So if you look at like trade, for example, we're talking about starting from the importer all the way to the from the exporter all the way to the importer. You have so many different players in there, governments, customs, shipping, insurance for shipping and all of that. So from there you get the benefit. It is scalable. So the blockchain is scalable. So you can have huge number of records being added. So it's always growing. Every new set of records are assembled together and posted on a block. And as we said, it is linked using cryptography. So every block is linked to the block before it. So if there is any change on a particular block, all the blocks before it will have a problem, because the hash or the key on that particular block will not be inconsistent with all the other blocks. And basically, so you have the data on it and you have the cryptography. Now, as I said, this can be public. So if it is a public blockchain, then everyone can read the data. But if it is private, then you have a public, what we call a public and a private key. Public key is the address of that particular transaction. However, you can only read the data if you have the private key. So people are permissioned and they have specific roles and they have specific access rights within the blockchain. So, as I said, I mean, okay, this is a shared registry, but also you don't have any central authority. No one is controlling the blockchain or have control over it. You have to have more than 51% of the resources to be able to kind of sway or affect the blockchain, which is very, very difficult. So that's become problematic. So one thing they say is that the blockchain will democratize businesses because of the lack of that central authority. One other thing is that you have within the blockchain what we call a smart contract. So you have a piece of software that has all the business rules. So they are automatically being enforced. So let's say, for example, we have a bank, and the bank have like the blockchain, and the smart contract is for paying dividends to the shareholders at specific time. As soon as the time comes, then the dividends are being distributed automatically by the smart contract. So, and again, what do you think, what role will be diminished because of the smart contract? the fact that the blockchain itself have that embedded contract in it that automatically acts on specific triggers, what do you think, what role will be diminished because of that? Say that again?
The administrative part.
Exactly. So litigation, they say, I mean, there won't be need for litigation because there won't be any inconsistencies in the understanding. I mean, it is a business rule. Once you have signed into the blockchain, you understand what are the rules, and it will be enforced based on the triggers no matter what. So there is objectivity also within the blockchain. Now, people may think, okay, is it just digital assets that can be presented on the blockchain? Do you think it's only digital assets? So it can be like certificates. Some universities now are experimenting with the blockchain in order to validate certificates. So if you are applying for a job, they can validate your certificate right away, and there won't be any, there is no way that someone would falsify, for example, a particular certificate or a degree. And this, they actually looked at it because they have found in Harvard someone who was actually retiring. At the age of retirement, they found that she had a falsified certificate. Didn't have a PhD, but actually was working in Harvard. So these are like the key features of the blockchain, if you want to just like review. It is decentralized. So as we said, everyone has a copy of the ledger. And there is cryptographic security, so there is no way that anyone can mutate it. Up until earlier this year, it actually happened that they rewrote a large number of blocks. So, of course, with the technology is a double-edged sword. Can use it for good and for bad. So we have, as we said, the smart contracts that does the process automation, and there is validation, as we said, by majority of the network. And once there is validation, then the transaction happens and value is transferred. So from your point of view, blockchain would promote security, given the fact that it is immutable. It would also promote transparency, because everyone can see what happened in the transactions. There is privacy in case that it is permission, so you have the private key where only the owner and those permission to have access to the data can get it. There is integrity in that we cannot falsify or play with the data. There is independence. Why? Why do you think blockchain will promote independence?
Because you don't need to rely on the other party.
Say that again.
You don't need to rely on the other party for that. You are independent enough to have the complete information.
Okay, and we also have the smart contracts that are acting automatically or enforcing the rules automatically. And uncorrupted, that's very questionable given what have happened earlier this year. So what are the concerns? Any concerns now? I mean, like, we have looked at IoT and we said there are concerns with security and privacy. And we looked at artificial intelligence and we said there is like concerns with bias and security again. What do you think are the concerns with blockchain? So that
the leaders for this blockchain.
Yeah. So, and that's what's really scaring central banks, is that they don't know what will happen. If I allow blockchain to occur within an organization, if I allow cryptocurrencies to replace the currencies that we know now, or like the physical currencies, what will happen? Who will have control? How can I manage these transactions? And we are seeing with the Bitcoin, money laundering and all of the illegal transactions happening, and government is not able to control it. Anything else? Any other concerns? Well, we have said security is a problem, because we used to think that there is no way anyone can break into the blockchain or can rewrite the code, but it actually happened earlier this year, as I said. And then again, I mean, like all of these technologies, yes, currently are being presented as the silver bullet, as the solution, but again, people who are unethical will have access to the same technologies. And now you will have an AI that can learn to conduct fraud rather than stop fraud. You'll have a blockchain that maybe is the smart contract is written in an unethical way and allow unethical transactions to happen and allow like aggressive behavior to occur. So they also say that you may not be able to stop fraud even with blockchain, because remember, how do you validate a transaction in blockchain? The thing is, we say that you have to have majority of the nodes on the network have to validate that transaction. But all they see is the transaction, the order. They don't have any background about the context, where it is happening, So, and that's the problem that we see now with the Bitcoin. So again, the fact that we don't have people and we have these machines and they are not aware, they may validate a fraud transaction, and it will be like immutable. You cannot even reverse it on the blockchain. So that's problematic, and as we said, it can be hacked, so that's a major concern. So now I leave you with the message is that really it is a concerted effort. If we want these technologies to help us solve the problems that we are currently facing in terms of ethical problems, there has to be a concerted effort from the technology people, from the domain experts who are you, from the policy makers, from the government, from different partners coming together in order to solve these problems. For you as accountants, my advice is really you have to jump on the wagon, because in no time you will find that these technologies are moving slowly but surely into the organization and are taking over jobs. So if you are not ready for that new wave, unfortunately you will be under the wagon, and you may have, like a lot of people have actually moved to other professions and so on. But a better strategy, in my opinion, is that you really need to get equipped with the right tools to know. And there is a lot of literature and a lot of articles written to recommend what are like the skill set that you need to focus on with these wave of new technologies coming in. With that, I end my talk today, and if you have any questions, I'd be more than happy to answer it.
As I did so much, and with this, I'd like to give you a token of appreciation from the IMA Doha Chapter. Ladies and gentlemen, please, before you go out, make sure that you have checked in for this event so that you can get your certificate of attendance. But please bear with us because it's going to reach to your email within 10 or 15 days.